Let's get to our next guest. That is Jake Dollarhide, the CEO at Longbow Asset Management. It has been a very long time. Jake, thank you so much for joining me today. It's so nice to see you on a day like this when obviously we've had a lot of conversations around what's going on with big cap tech. What do you make of the weakness we saw in November and some of the questions we're starting to see in the market about AI valuations, the circularity of financing and depreciation?
Yeah, I think at some point the AI trade is going to fall flat on its face, but I don't think that time is now. There's going to be another DeepSeek moment. There's going to be other other Michael Burry calls about AI top. But right now, this is a Pavlov dog's market. This is a market that's been trained to buy the dip. So every time you get a dip, you get more people in. You look at Alphabet up 130% since its DeepSeek low, NVIDIA up 113% since its DeepSeek low. But what investors are seeing is NVIDIA's down 13% from its recent high. And so you just get more money piling into those trades because they've worked.
That's right. I mean, but we did see a little bit of a shift last week in sentiment. I mean, you saw Google Alphabet leading there. It's been getting a lot of praise lately for Gemini. And then obviously with this whole idea that maybe we're looking at a new circularity developing that is centered around that, away from NVIDIA and everything that's involved with that. I'm just wondering, as you see the sort of tectonic plates are shifting, what you make of, some of the headlines we're tracking around OpenAI declaring code red to improve ChatGPT. You mentioned DeepSeek. I mean, we've also heard in just the last couple of days, it's been upgrading its models. Where do you see things right now? I mean, does this just go to show that there is some rotation happening in this market?
Oh, absolutely. The reason Sam Altman is calling a code red for OpenAI is I think he thought his lead was invincible. His lead in AI was absolutely invincible. Think about how much has changed at Alphabet with Gemini 3. 20 months ago, it was just 20 months ago, February of 24, when Google rebranded Bard. Does anyone even remember Bard, the first AI brand for Google? No, we're already in third generation Gemini, and they're pushing OpenAI to its max. I really look to what's the next big play. I look at Apple now. Apple's now in last place in the Mag 7, the AI trade, and they just replaced their AI head yesterday. And so as we look to find new investments for the year, not just within tech. Let's look at financials that are only up single digits, materials only up single digits, real estate only up single digits, consumer discretionary, consumer staples only up single digits on the year. So I think there are a lot of opportunities, a lot of value in this market. The S&P 500 is up 15%. Yes, it's had 35 new highs this year. That's crazy. You would think with 35 new highs, it'd be up a lot more. And 224 companies of the 503 companies in the S&P 500 are lower on the year.
Right. Obviously, we've had a bit of a rethink around rates and also, of course, the whole AI tech trade, as you mentioned. As you say, it's been an interesting dynamic, this whole Gemini versus ChatGPT, GPUs versus TPUs, etc. Interesting comments out of Masayoshi-san about how he was crying selling NVIDIA shares, as I pointed out earlier. More important what he says, I suppose, than what he does with his money. But with all of this in mind, you mentioned some opportunity value in the market, although we did see defensive selling off yesterday, which was interesting. What gives us the green light then, Jake, for this Santa Claus rally as everyone's been expecting?
Well, I think it's next Wednesday during the FOMC announcement of whether they're going to cut or not. If they don't cut, I think we lose all this rally we've gotten since 2 Fridays ago. A not cut is a lump of coal, and a cut is probably a foregone concluded Santa Claus rally, which will go from Christmas Eve through the second trading day of January. Look, we've always heard the 80-20 rule, but this is a 50-10 economy where 10% of the households make up 50% of the purchasing power in this country. Look, this is a tough economy. 4.4% unemployment could easily top 5% in the first quarter of next year, and that would be a disaster for the Fed. So I think the Fed needs to continue to get out in front of the labor data. ISM manufacturing came in light yesterday. Retail sales were surprisingly weak last week. And so there's a lot there. There's a lot of ammunition for cutting at the Fed. Right now, I think the scorecard is 5 against a cut, 4 for a cut, and 3 on the fence. And but I think Vice Chair Williams' commentary about there's room for a cut, I think is going to save the day, and I look forward to happen.
Yeah, we had Williams, we had Waller, we had Daly. We didn't get anything from Powell last night in his speech because, of course, there's blackout. But, I mean, the market is currently pricing in 80 to 90% chance of a cut. So let's wait and see. Jake, always appreciate your analysis and also your analogies. As always, I'll see you later. Jake Dollarhide, CEO at Longbow Asset Management. Appreciate it.